Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Coffey, Market Strategist at TD Ameritrade, to discuss what was a pretty busy first quarter. And Alex, the first quarter of 2023, it's coming to an end this week. There were enough market events packed in the quarter that could have been spread over a number of quarters. As Q1 closes out, interest rates are back on the rise, and that's impacting tech stocks this week. Do you think investors are moving beyond the challenges in the financial sector with regulators speaking in favor of tighter regulations, or do you think they're back to the higher rates for longer narrative?
I think the market's doing its best to digest the new updates and information as it gets it. Obviously, this is a fluid situation. There's been headline after headline. As you mentioned, it's been a very, very busy first quarter, but that's really been accelerating in the last few weeks of this first quarter. What I would say is that the market's in a bit of a paradox right now. What I mean by that is you have, on one hand, banking uncertainty that has led to I guess the thought that the Fed will have to take an off-ramp, take a different policy path, potentially ease monetary policy, leading to potentially easier financial conditions or looser financial conditions. However, at the same time, those banking uncertainties are leading to tighter credit conditions as those banks seek to potentially raise capital, seek to find collateral, et cetera, and lending standards potentially getting harder. On the other side, let's say that we do have the worst of the banking uncertainty in the rearview mirror. We still have inflation. And of course, we'll get on Friday the PCE price index from the personal income and outlays report. That'll be a pretty critical reading, I believe, this week to help set the tone for where things may go from here. But even if we do see the Fed ease, which is still, of course, up in the air, coin flip for the next meeting in terms of if they raise rates or not, it doesn't necessarily mean that the coast is clear because there's just so many factors influencing at once. So tech has acted as a safe haven, and with those fears starting to dissipate, you're seeing that safety trade being a little bit unwound.
Do you think the market is ignoring fundamentals and earnings? It seems as if interest rate policy is the only narrative that's impacting stocks.
It does certainly seem that way, Jill, but what I would say is we're going to have a whole new earnings season that kicks off in a few weeks. That'll be headlined by, of course, the big financials. And then, of course, we'll hear some from many of their regional bank counterparts. That's really the last kind of shoe to drop, if you will be a continued earnings decline. We know that the inflation narrative has been a very macro narrative. We know that, of course, this banking uncertainty has become a more macro and potentially even global narrative with credit squeeze and uncertainty with Deutsche Bank as well. But if we do start to see more conservative guidance, we do see those outlooks cut as a result of either consumer activity or, of course, maybe just a more defensive positioning by different businesses and corporations and result to some of the stuff, I think earnings are going to come into a greater spotlight. So while right now it feels like they're not in the spotlight and they're not influencing decision making, I think that they actually have a potential to play an outsized role in this quarter coming up.
And finally, Alex, let's take a look at technical levels to watch on the Nasdaq-100 and what you're seeing in the Nasdaq-100 volatility index, what we call vol-Q, because at the end of the day, price action is really what we can confirm.
No doubt about it. And yeah, we've looked at this chart for several months now. It's sort of this stoplight theme of different levels from 10,500 upwards to 13,500 with the 12,000 point mark sort of serving as our yellow kind of middle ground. But I added a new level here, Jill, for this one because it's sort of acted as a battleground between our red and yellow lights. And this is this 12,750 mark right in between. So I indicated this with a dashed white line. This to me is the level I'm going to be watching. Do we break through this to the upside, particularly if these big mega cap companies continue to carry their weight? Concentration is as high as it's been in quite some time. And in many of the major market cap weighted indexes because of the outperformance from some of these mega cap companies. If they are going to continue that, we do see an outsized performance. Can we break through this middle point and potentially work our way back up to that red light area, which would, of course, serve as a pretty significant level of resistance? We haven't been there in the better part of the last year.
All right. Appreciate the insight as always. Alex, thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.